Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. It's Thursday, October the 4th. A really interesting night. A breakout in US 10s and US 30s. The US 10s are at about 3.18. The curve's back at 30 points, so all the hand-wringing recessionistas can put their hankies away. 30 years have broken out, and according to Peter L. Brent, we've seen a generational change. It's been coming for a while. I wasn't sure it was going to happen before non-farms, but it has. That, to a certain extent, to a large extent, makes this the most important non-farms for the year, because if it confirms this breakout after what Jay Powell said this morning about the trajectory of rates, the strength of the US economy, and that rates are still accommodative, then we can see bonds continue to go higher. We can see the US dollar, which has pushed the euro down through 115, it's about 114.80. The Aussie down to just above 71 cents. Dollar yen up at 114.5 or thereabouts. Sterling's back in the 129s. The Kiwi's down at 65. The dollar index is at 96. So it's still inside the range. And that's, of course, we've seen the euro still hasn't taken out 113. If it does, things get really ugly for the euro. 108 and change is a Fibbo projection of that. Much water to go under the bridge, though. My sense is we'd need a few days of these bonds to hold up here. We need the confirmation at 8:30 New York time on Friday morning that the US economy is as strong, because people still don't want to believe it. They still want to think there's a recession around the corner. But anybody that's been watching these videos for a while, and I know there's many new people, anybody that's been reading my writing, and I know there's lots of new people there as well, will know that I have been a US dollar bull for some time, largely because of policy and economic divergence, and I think the US economy can kick away and continue to grow in a manner that the Australian economy has. That doesn't mean that you're going to have super strong 4% growth forever, but it does mean that you get a persistence of growth that belies all the hand-wringing and recessionistas. Anyway, 2 minutes in, let's dive straight in. Monthly US 10-year chart. Now, this is the chart that I use on my Saturday screen. What I do is I look at the monthlies, I look at the weeklies, and I look at the dailies. Now, on the dailies, last week's failure at 312 was a suggestion that maybe it had stalled. The weeklies had stalled too. But as you can see, the weekly and monthlies have still got this really strong uptrend. And so to that extent, we've now taken out also this trend line from back here at the early part of this century, and so this is a break. This is a clear break. This is a run towards 345, 350, maybe even 375 on a multi-month time horizon. So that is what's been putting a lot of pressure on these other on currencies. Now, I didn't mention stocks in the intro, but stocks opened up higher, finished higher, but you could probably expect that will wash away a little bit if the market pardon me, does get excited about what Fed Chair Powell said. He was quite hawkish, folks. Get a chance, have a read. If you don't read Markets Morning, have a look at it. If you're not a subscriber, go to my website and subscribe to it. And I'll send it through. Anyway, this is the euro. This is the daily euro. Now, pretty clear. We've taken out the fractals here. So we're back down below 115, and I've been saying that a break of 115 opens up the chance of a move back to 113. That seems reasonable to me. We've been 113, then we had this inside box. We had this inside box within the inside box, recall, a week or so ago. We've had a massive failure. We've had a break of the trend line, and now we're breaking lower. You could argue that 5 big figures there is where we're headed. So that trend line 117, that means we're heading towards 112 or something like that. But as it stands at the moment, if I go to the 4 hours so you can have a better look, let me just shrink that down. So if we do a 4-hour Fibbo on this move here, then you can see that 114.30. So we're now down and through the 61.8. So nothing really left. The next level is the 23.6 or the 76.4, I should say. Which is 114.30, but a break of that gets you to 113. In a broader sense on the dailies, it does look to me like it's heading lower. Dollar yen, strong pulse higher. One of the things about dollar yen is when it runs, it really runs. It can run 10 big figures. if it's really going to get a wriggle on. So the question we've got to ask ourselves as it gets into this, this zone that I've had there for quite some time, as you can see, is it going? Now, I think that for me, the reality is I'm just going to trust my weeklies. My weekly scan, which was we've had a move. It's come back to 38.2%. A break opens up 116.30. And that seems to be where the medium term is. Of course, we're going vertical, and that's always a warning to me. So I wouldn't be surprised to see a retest back towards 113.64 or something like that. But while that uptrend holds, dollar yen is going higher. Sterling, Brexit still becoming a mess. Boris and Theresa May having a blue. She's said that we need stability in government so that we don't threaten Brexit. And of course, the DUP, who is the Tories' partners in the government at the moment, have said that they won't back Boris. So what do you got? You've got this up move. It's failed just below the 38.2. So this could set up for a massive move lower, folks. This could set up for a 119 or a 118 move if we get down and through 126. We've got to get there first, of course, but the downtrend is the downside, I should say, is looking a little bit stronger at the moment. And certainly, if I extrapolate that little trend line, which is drawn off my 4-hour charts, we're looking at sort of 129.85 or something like that. So 40 points above from where it is now, and you might see it lower. Speaking of lower, the Aussie dollar. That's the weekly chart for the Aussie. We haven't taken out the 70.85 low yet. If we do, then we've had a failure at the top of, or at the downtrend line. We got to 73.14 just last week. We're now back at 71.03 for a 210 odd point fall. A break of 75 opens up that 69.94 level I've been looking at for a while. And then, of course, it's looking more and more like this is going to be a full round trip back to that January 2016 low, which is about 68.27 or thereabouts. So keep an eye on that. It does look like it's breaking lower. Copper did well, but the interest rate differential and that building approvals number yesterday in Australia really did put the cat amongst the pigeons. The Aussie was the worst performer before the ADP data, 230,000 for ADP. Before the ISM non-manufacturing, 61.6, a new record high, and the Aussie was already under pressure. Then, of course, Euro joined the party. It was down about 0.2, 0.3 before Powell's comments. It's now down about 0.5, and the Aussie's off about 1% day on day. So looking quite wobbly there for the Aussie. Now, of course, stronger US dollar and a CAD that came into. I'm going to switch profiles here for a sec. Excuse me doing this, but this is my screen for the weekend, and I think the daily on that is a better indication, as it thinks, a better indication of where we're headed. My screen's not responding at the moment. It'll get there, I hope, in a moment. Not responding. I'm going to pause for a minute. And we're back. So this 128.80 to 127 and a half level is resistance. My sense is it was 127 and a half, 128. We're back above 128 now. We're back up at 128.72. But if we can get back above 128.80, then you'll know that there's a real chance that you ratchet back towards the other side of that. Now, there is a lot built into non-farms. Now, I don't want to be overly cautious because the trend is your friend until it bends, and you've seen in Euro, you've seen in Sterling, you've seen in Aussie. But the important thing, folks, Euro hasn't taken out the low. Sterling hasn't taken out the low. Aussie hasn't taken out the low. Dollar yen has taken out the high. CAD's still in this overall range. So if we're trading just purely technically, we've got to respect that. And that's one of the reasons why this 127.5 to 128 region was a reasonable place of support for CAD. So that's something just to keep an eye on, to keep in the back of your mind as we head back towards non-farms. Now, this might take a second. No, yeah, Kiwi. I've changed my chart, so got to find that Kiwi as we think. I apologise for this. I haven't had this non-responding thing. I've got a real issue with my CPU at the moment. I don't understand why, because nothing's open except Camtasia, where I'm recording, and this. Now, see, so yesterday I said I thought we were going all the way back. That's where we are now. We need to shrink it down a bit. I probably need to go to the weekly to see what the break might be. 61.60 is what I know I've written in. I think 64.40 is what I've written in my weekly, and then 61.60 if 64.40 breaks. So that's a clear downtrend. You could probably change the angle if you like. You could probably take it across there. But Kiwi probably looks a little worse for wear relative to everything else. But the Aussie's not far off, is it? Now, gold. Gold was off about the same as the euro. So a big shout out. One of the viewers sent me a seasonality chart for gold, which showed that September, October, November are the strong months, and December for gold. So that might help explain why gold did all right. But it was off 0.5% with euro last night. You've seen it break back up into this little wedge here, but it hasn't been able to take out that high. For me, this is at best building a base. But at 11.98, whereas euro is down and through 115. At 11.98, gold is about $15 above the 11.83 to 11.80, say, region that would have opened up the next $20 fall. So gold relative to euro, to me, feels like it's doing okay. So we'll keep an eye on that. Not terribly excited. You can probably just draw a big box between 12.60 and 12.17 and cut off the bottom and, draw it about around 11.80. But not a lot there. But keep an eye on gold. That could be an important barometer. Now, copper did surprisingly well last night relative to risk, relative to what Fed Powell said, and this is kind of counter. So this is a really interesting one. It would have to get up and through $2.86 and a half, maybe $2.93 to really change my outlook that it's at best basing and there's still a chance to go down. So they're the levels that I'm watching, that 6 or 7 cent zone in that region there between 286 and a half, which is the recent high in the range top here, and 293, which is an old series of lows. So keep an eye on that. On balance, if I had to make a move, I'd probably sell it with a stop just above there. It's 5 cents, so you'd have a position size that reflected that 5 cents. In terms of Brent and WTI, boom, what a move last night. 1.3% bullish engulfing there for WTI. The most interesting thing about WTI, right, and this is where you know it's a bull market, I still feel like price is getting a little bit overextended, and we're hearing that the White House is talking to OPEC about using what they think is another 1 million barrels of excess capacity. But what my sense is, if I shrink that down, because I can't really get a sense of it like that. Look, we've got the MACD gone almost vertical, not quite. So last night was very bullish. You can't argue with the price action. When you get the Saudis saying that they're going to go to 10.7 million barrels a day, which is close to a record, when you get quadruple the amount of inventory build as people expected, Cushing was up as well, and then you get a dip that is bought back with such gusto, that is the epitome of a bull market. That is a bullish engulfing. So on the basis of a break of that 138 and break of this previous high, you'd probably be looking for another $3 to $4 higher. But I am cautious. I'm not selling it. I have to wait for a signal, but I am cautious on WTI. The weekly trends, the monthly trends are still higher though. Brent had a big move as well. They were both up about 1.3%. And you can see it's kind of gone vertical too. So my next step would be to draw the trend line through there. And then if it got back to sort of that 85 figure level or something like that and took that out, or this, this previous, if I just take that across there, this previous trend, if it got down below, well, I guess yesterday's low was $84. Okay, so today it's pardon me, it's a little bit higher. So keep your eye on that. Still trending higher. The weeklies are still, strongly higher. Stochastic starting to get overbought. It does feel like a market that's getting overcooked to me, but no sell signal. So certainly I'm not doing anything there at the moment. In terms of stocks, the S&P futures have broken down. So this is the end of the day. This is Powell. This is 4 hours, obviously. And what you can see here is they're just starting to take out, after a long tail there on the dailies, they're just starting to take out this little trend line within the trend line. And what does that tell you? That tells you that we could probably slip certainly to that low there, which is 2900 to 2910. So that's, another sort of 13 to 23 points. If you got down through 2900, then I'd be looking for a move back down towards sort of 2870. These are very small moves in the grand scheme of things. if we get a big non-farms, then the 20, 30, 40 points I'm talking about is going to pale into insignificance. There is a bull case for stocks, though. Don't forget, the US economy is strong. What Amazon has just done by increasing wages is pay more people money. That's more money to spend. That's more economic growth, more money floating through the economy. And Amazon will also put pressure on other retailers to do the same. Here at home, SPY 200 seems to me we've had a move down. We haven't been able to clear conclusively the 38.2 or the 50%. We've dipped down. We've had an inside day yesterday. We'll see what happens today. Depends on what Asia does. No China, of course. And what we do here. Could we go lower? We could. But oil's up, copper's up. So it's an interesting move here. My sense is we go back to 60.90, give it another retest and see how it looks. We got down to 61.05 the other day. But as long as 60.90 holds, things look okay. If 60.90 breaks, then we run. DAX to me looks like it's still rolling over. We haven't taken out. So the low on that big reversal, that low was 12.174, and last night's low was 12.186. So 12.174 for me is the level to watch. And of course, you'd need to take out the high from that big reversal, which is about 12.4. So 12.420, 12.450 would be the level to watch. In terms of last but not least, just quickly on Bitcoin, there's the downtrend line that you're watching, but it's going nowhere. It's bouncing up and down within a short-term channel. One thing I just want to quickly show you is this. I know it's I know it's really dark, and I don't know why it's not dark on my screen. When I was at ActiTrader, the head of marketing was South African when I first went there. And he asked me to have a look at the South African rand. I hope you can see this chart. But what you effectively got is this old trend line that I drew a long time ago. And I haven't looked at this chart for months, for probably years, actually, a couple of years. And you can see the benefit. If I could only draw one thing on charts, folks, it is trend lines. Anyway, that's it from me. I want to wish you all the best today. It's not a lot out. We've got trade here in Australia. We've got Challenger jobs tonight. We've got jobless claims in the US. We've got another speech or so from the Fed, but otherwise it's quiet night as we all get ready for non-farms on Friday in New York. Bye for now.